Hey everybody, what's going on? It is James here with Crypto Common Sense, and in this video I'm going to walk through some basic supply and demand, and I'm going to walk through some charts that I posted a few weeks ago, and then I'm going to update those charts today and kind of show you how they played out and walk through the reasoning behind the charts. And I think you'll get a lot out of this if you will carve out maybe 10 minutes of your day, or if you watch this on 2 times speed, maybe even less than that. All right, so before I jump into the content, please remember that nothing in this video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable assets. So back in early April, less than 2 weeks ago, I guess Elon Musk played some sort of prank, gig, whatever. I used to be a big fan of Musk, but I don't like his erratic behavior. So he changed the Twitter logo to the dog or whatever from Doge. I talked about this on Facebook. And it started to pump really hard, really fast. And ended up pumping like 35% or that ballpark versus Bitcoin, and even more versus the US dollar. And suddenly when you went to social media, people were bullish on Doge, and people were talking about the nonsensical numbers of $3 Doge and $5 Doge and dollar Doge and all of these things that really had no place being talked about, because Doge is in a very, very textbook bear market, and Doge was having a very, very textbook pump and dump. Okay, so I posted about this, and I got some pushback, not in this particular post, but I got some pushback in some other posts. One of those things that I felt strongly that I should do a follow-up on and kind of show people, like, look, I was trying to show everybody as it was happening what to watch for. And I think it's easy for people to say, oh, well, he's posted this chart, but it happened a month ago, and so, it's easy to cherry pick. So this time I posted it as it was happening, walking through the thought process. And now I'm going to kind of do a video recap and go a little bit deeper. So this was the initial chart. Well, not the initial one. This is actually, I think, the second one I posted. First one I posted right when I was hitting this line. But when I posted this chart, what I was showing was there's demand sitting down here in this box from back in 2022. That's, you can see that because there's a tail down here. So when price got that low, there were buyers waiting there that pushed it back up. And more often than not, when you come back down to that level, you will still have some buyers down there, right? It's not like everybody's going to just abandon it. Typically speaking, you'll have buyers there, and so you'll have a level of support down here, a zone of support, and oftentimes you'll be able to find long positions in this zone. Now, this time what happened was Doge actually front ran that zone. People were getting a little excited about it, and it actually front ran it, and then, of course, this pump was orchestrated. So when it pumped, if you missed the long, okay, and there were, absolutely possibilities to get long down here during this range that lasted, about 10 to 14 days. But let's say you missed the long. The average retail trader, and this is what I was talking about here, they see the pump and they regret missing it, and they FOMO in late, And I saw some of this in some of the comments, well, better to get in late than not at all. Better to get in at 10 cents than 20 cents. Better to get in at 10 cents than 50 cents. Better to get in at 10 cents than $1, so on and so forth. But the reality is there was no legitimate reason to be chasing this pump. If you're in a downtrend, which we've talked about many, many times, downtrends look like staircases in a textbook example. They don't always look that clean, but that's the general direction. You go down, you pump a little bit, you go down, you pump a little bit, you go down, you pump a little bit, so on and so forth. This was the last bull pivot. It came down, it had a bullish pivot, meaning it started to move back up, it failed, and you had a bear pivot here, and it moved down. Here's your new bull pivot down here. Textbook market behavior would be to come back up to that last pivot, right, to the last bull pivot, and it should, in theory, act as resistance, which is what I was talking about, right? Gamblers see the pump, regret missing it. Traders see obvious resistance and look for reasons to short it on a swing trade. See, now acts as resistance. So what happened? This happened. There's the level, the resistance, there's the dump. So it fell from the peak. When it tapped that resistance line, it proceeded to fall 27.4%, and it did it in less than 2 weeks, right? How long did it take? We can actually zoom in and get an exact count. Let's see. Date range from the peak there to today, 9 days. 9 days. And where did it end up at? Right back at the beginning, lower than where the pump started at. This single day pump, right, where he changed the logo or whatever on Twitter, the open that day was here. We are now lower than where that pump started at. And yet there are people who are buying up here because it's better to get in now than wait till it's a gajillion billion dollars someday, right? That is not trading. That is gambling. There was no reason to get FOMO on that. Like, that's what happens in markets. People get FOMO, and so they think, well, I've got to get in or I'm going to miss the boat. You're not going to miss the boat, folks. These things happen every single day. There are thousands and thousands of different assets that you can trade. If you miss a pump, your best option is to look for the dump, right? Now, it's different if you're in a bull market. If you're in a bull market and you miss the pump, you still want to look for the dump, but instead of trying to short it, you'll often look for the dump, and then you'll look for a long position because you're trying to go with the overall trend. If the overall trend is up, when it dumps, it's actually a dip, right? And you buy the dip, right? Cliche. But in a bear market, which obviously this is a bear market, right? It's down, what, 80, 90%? Let's measure it. It's down 67%. So not as bad as I thought versus Bitcoin. Down 67%, obvious bear market. You're coming up to retest an obvious level of resistance. Don't FOMO into stuff like that. Look where you can take a trade. Look for reasons to take a trade. And again, I'm not saying that you blindly short every resistance level. That's a little bit far-fetched. You do want to try to back that up with other reasons. Try to find other things that support it. You know, that may be, you may be a MACD trader where MACD is confirming that this is going to be a good place. You may be an RSI trader where you're finding some bearish divergences that are happening at the same time you're coming into resistance. You may be a setup trader where you have specific setups that are happening at the same time you're coming into resistance. Maybe you're looking at resistance on this daily chart or this 3-day chart, and you're looking at a 15-minute chart, and boom, there's this beautiful, perfect setup that you like to trade, and it's happening at the same time it's hitting resistance. You stack those reasons together, and as you stack those reasons together, you develop an edge over the market. And as I talked about in previous videos, you only need the tiniest edge, right? When I went and Googled it, blackjack casinos, typically they have about a 0.5% edge in blackjack. Make billions of dollars a year on that 0.5% edge. You can do the same thing in markets if you have a 0.5% edge. You just trade it over and over and over again. Okay, so I want to do this video. You know, now what will happen is you'll have people who were bullish up here and they'll start flipping bearish in here because, gosh, it just fell 27%. But again, same thing applies, folks. Don't get caught off sides. If this just moved down 27% in a straight line and it's coming back down to retest the top of what was an ascending triangle, look at this. This is support now. See this? How it dipped underneath it and then it's sitting right on top of it right now. It's not closed. See how it's sitting right on top of it? There's demand there because there were people who didn't buy back here, who were patient, waiting for this pump to fizzle out, and now they're interested. Okay? So the same people who want to get, you know, bullish after a move like this, like, oh, it's going to the moon. They're the same people that get, you know, panicked and start selling down here. A lot of the people who bought up here are now going to be selling down here. When in reality, you should have been selling up here. And if anything, I'm not saying to do this, I'd be buying here, not shorting, because I'm sitting on support. So the edge goes to the bulls, not the bears. Okay? And of course, it's a daily chart. If you zoom out to a weekly chart, it looks less promising for bulls, right? It just doesn't look like a range at all. Okay, so we'll have to kind of see how that plays out. Again, it's not a trade that I'm taking. It's not something that I'm interested in taking. It's not enough, you know, reasons for me personally to take a long. But I'm saying if I had to choose one or the other, you know, that's what I would choose. Okay, I would choose to be more bullish than bearish. So I could talk about the market as a whole. We could go off on tangents about that, but really I just wanted to focus on this simple lesson because I did a video, I believe I did a video a few weeks ago. Maybe it was just on Patreon or Discord, I don't remember. But I talked about this. Like if you'll just understand, I think it was on Discord only. I don't think I put it on YouTube. If you'll just understand supply and demand, that puts you ahead of probably literally 90 to 95% of the general public, right? General retail don't even understand like what a pivot is what a resistance level is, what support is. If you'll just get that down, it will save you so much heartache, and then you can build on top of that base and start looking for fancier stuff. But quite frankly, you could do really well just spending some time each evening and looking through charts and saying, okay, which assets are coming into a major level of resistance or support, and then planning your trades accordingly. Most people just don't want to take the time. They want to sit down with zero prep work. They want to open up a chart, and within 5 minutes, they want to be in a trade. And that's just not how real trading works. Okay? Got to do a little prep work. Got to do a little research. Got to figure out what you're trading. And if you are trading like a single asset, like if you're a Bitcoin-only trader, you can do that. But you have to be prepared to watch the chart more because you're waiting for specific setups and specific things to happen on a single chart. Whereas other people might be scanning 100 charts looking for some certain pattern that they like to trade. And I don't think there's a right or a wrong answer. It's just what you prefer. I used to prefer trading one asset and just watching that chart. I still prefer that on stocks because they move so fast. I can always find opportunities trading like the QQQ. But on cryptocurrency, I think it's probably a little easier if you will search through many charts and look for really nice setups like this versus trying to make setups appear on a single asset that might not actually be there. So I'm going to go ahead and wrap the video up there. I will remind you one more time that I'm just some guy sitting in a spare bedroom, which of course means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed this video, make sure you give it a thumbs up, make sure you subscribe to the channel, and of course, as always, this is James with Crypto Common Sense reminding you to please trade safe.